Fractional investing in REITs or real estate investment trusts, offering you an opportunity to invest in India's office and commercial market without actually having to shell out crores of rupees to buy a physical asset or a building. Now we have a PropTech company, Alt DRX, which is promising an opportunity to invest in India's real estate 1 square feet at a time. And not just in commercial assets, but also in residential projects. How will it work? Let's understand from Anand Narayanan, CEO and founder of Alt DRX and also a veteran banker cum real estate professional. Okay, Anand, straight diving into the first question. You've recently raised $3.6 million. So clearly investors are seeing something in this business model. Explain to us in easy terms, how will this 1 square foot at a time ownership work?
Yeah, thank you for having me on the show, Manisha. Good to see you. Real estate has always been a very, very lumpy investment game, right? I mean, when you and I can invest in fixed deposits for $5,000, you can start an SIP for $500. Why should one need several lakhs or several crores to invest in real estate? That's where this idea germinated. So we're trying to see if we can get real estate to be dematerialized. That's the first start. A 50 crore asset, 50,000 square foot, if it can be broken down into 50,000 units, then every unit is purchasable at $10,000. And that's where the liquidity of the real estate steps in and you start getting liquidity premium. So people can buy and sell real estate 1 square foot at a time. All it needs is for you to log into Alt DRX, do a quick KYC, and you get started. You see what are the assets that are available and choose which one you want to invest in.
So let's come to the kind of assets that you will offer. I mean, is it going to be mostly office buildings? All three REITs have mostly office buildings. Even fractional opportunities are mostly in those standalone office buildings.
Right. I mean, we would also bring in office space, but I think we will leave the office assets to the larger boys like Blackstone and Brookfield of the world. Our idea is to bring in exotic assets. We will bring in school as a real estate opportunity. We will bring in hotels and resorts as an opportunity. We'll bring in industrial warehousing, high street retail, rental housing, hostels, senior care. Many of these are socially called as impact assets, right? Today India lacks institutional rental housing assets. Now, how do you bring in capital? How do you bring in a vibrant capital markets to own these assets such that people can come and rent it? So we will bring in all kinds of asset opportunities and people can choose what makes sense for them, where they resonate, what resonates with their views on which assets will do well in the long term.
Okay. So, publicly listed large platforms, whether it's an NSE or a BSE or a commodity exchange is regulated, right? It's a large public platform. How are private platforms assuring safety? Tomorrow, let's say the platform becomes extremely illiquid and decides to close down. What do you do? What do unit holders do?
I think that's a great question, right? So everything starts somewhere. So the banks came first, the regulators came later. Doesn't in any way remove the responsibility for us to be compliant to various laws. Just because there's no licensing law to run what we're doing does not mean there are no laws applicable to us. There are various laws that are applicable to us. And it's our job to ensure that we comply with some of them. For example, all the capital, all the money that our users add to the wallet are on escrow accounts. Our ledger balances are written on blockchain so that becomes immutable. Our SPVs, which hold the real estate in the real world, which is registered in the name of the SPV, that has third-party reputed administrators who anchor it. So our job is to do property management. Somebody else does the administrative, secretarial, regulatory compliance work, and that is a reputed third party. So at all points of time, there are checks and balances. Even prior to getting an opportunity to be listed, Manisha, there are various due diligence, right? I mean, when we buy a home, I mean, how much due diligence would we do? There's hardly any due diligence that we do. But when you buy into a hotel, when you buy into a warehousing, it is the platform's responsibility to bring in various due diligence. So we put in a title opinion that's a public document. We put in a building due diligence so that people know, is this building going to be lasting long? What's the quality of the building? So a reputed building manager is going to give a due diligence report on how the building quality is. The valuation, the price at which you enter into the asset, that's the public document itself. Are you entering it at below market? Are you entering it at market? So the valuation study. So all these are public documents.
Okay. All right. So we will see how it evolves. Do you already have an asset right now which you're ready to launch with?
Yes, we have 2 assets that are already there. And both these assets are not office assets. They are hostel assets. So in some small way, we are also creating a little bit of impact such that, young people can rent out assets, and these assets are institutionally managed. A landlord is not throwing them away. A landlord is not saying 10 p.m. lights off. So institutional-graded assets.
All right. Well, it's interesting to see that we have this initiative happening in India and not elsewhere in the world, which are far more evolved real estate markets. But then they say maybe this is a market easier to disrupt. Anand, thank you very much and all the very best.
Thank you so much, Manisha.
Well, any new platform of technology which promises to take away the lumpiness of investing in real estate market is actually very welcome. Let's see how this one shapes up. That's it from me. Goodbye and thanks so much for watching.